welcome to Markets Today on Business Today Television. I am Shail Bhatnagar joining you on this fabulous Friday morning, which is also the beginning of the last week of August's monthly expiry of futures and options contract, where you've seen the Nifty dipping 2% and the Bank Nifty falling about 3.5% from its all-time highs hit in the last week of July. But this is how the markets are. You give back some after gaining a lot. So we've seen a fantastic rally over the last 4 months between April and July, and August has turned out to be a month of profit booking. Nevertheless, let's look at the first and major headlines. Wall Street was highly strained ahead of US Federal Reserve's two-day event as traders preferred to press sales on major indices and stocks, fearing a hawkish view of interest rates in the months ahead as inflation remained above forecasts. Indian stocks are likely to slip further on Friday in the face of global risk aversion towards equities as weakness creeps in across Asia. Build-up of short positions is seen across Nifty's heavyweights, and they are likely to trade is likely to be weak ahead of the weekend. Welcome once again to Market Today. Over the next 1.5 hours, we'll look at not only major indices, but also we'll have a look at how individual stocks are performing. But let's start with the Nifty. Right in front of you is the daily chart of the Nifty. And as you've seen in Thursday's trade, which was also the weekly expiry, the Nifty couldn't hold on to its earlier gains that were seen in the first 45 minutes. So you have 19,386 in front of you, down about 57, and the morning cues that are coming in from Gift Nifty are not conducive to bulls. Somewhere a 100-point downtick is seen. Nevertheless, let's analyze data that's come in so that you will get cues which are likely to impact markets today. Well, in the month of August, now we are in the last week of the monthly expiry, and so far Nifty is down 2% from its all-time high of about 20,000 at about 19,386, and the Bank Nifty has lost about 3.1% from its recent high of 46,400. Let's look at individual levels. You'll first see the chart of the Nifty. It shut 57 points lower at 19,386, and what's interesting, as you will notice, is that it tested its low of Wednesday. The chart will come in front of you, as also a new chart will be introduced in front of you, which is the 15-minute chart, which you will see on screen. So the first 45 minutes of trade were a gap up opening as the market enjoyed a lot of positive developments because of ISRO's successful moonshot, because of very smart rally on Wall Street. But after 45 minutes of trade, the Nifty slipped as it was unable to overcome the 19,600 resistance, and that slippage continued throughout the day, the Nifty ending at its day's low and also testing the low of Wednesday. So this is how the chart was positioned, and as you see, two or three major events are impacting sentiment both on Dalal Street and Wall Street, as also in global equities, which is the Jackson Hole annual event of the US Federal Reserve, where the chairman is likely to make a comment on how the future trajectory of interest rates will pan out, given that inflation still remains out of control in the United States. And that has sent a shiver down the spine of equities across the board. And that's the reason why you see this nervousness creeping into Wall Street in yesterday's trade, as also in global equities. Back home, the RBI came out with its minutes of the meeting that was held on August 10th, where interest rates were held steady, yet they mentioned inflation, although they mentioned the transitory nature of this inflation, which is because of high vegetable prices. They are likely to correct, and inflation is likely to slip a bit further but still remain elevated. So that was the gist of the RBI minutes of the meeting that came late post-market close on Thursday. Looking forward, given the correction that is seen in GIFT Nifty, today's Nifty levels are slipping lower. If you see the index chain of options, now a new support has emerged at 19,200, 19,300. This is where you see heavy put writing, which means that support is coming in, and a lot of call writing is seen at 19,500, 19,600, and that remains a very, very strong resistance level. We are also going to show you some individual charts of heavyweights such as Reliance Industries, HDFC Bank and Infosys. All these three put together impact about 35 to 36%, if not more, weightage on the stock. The first chart that you see is Reliance. As you can see, it was a very, very sharp loser in yesterday's trade, ending at day's low, as also below the 200-day DMA. This is not a good development. Just as the demerger has happened of Jio Financial Services, Reliance has been in a sideways to a consolidating trend. You see the gap down, which was the readjustment price of Jio Financial Services, and beyond that, Reliance has not been able to sort of overcome the problems that the broader markets are facing. Similarly, take a look at the chart of HDFC Bank. This is now the highest weighted counter on the Nifty post the merger with its parent HDFC, and the charts are equally distressing, if not bearish. The stock is firmly below its 200 DMA, and the level that you see in front of you is somewhere of March, that is there. So HDFC and Reliance Industries are the two weakest charts in the index heavyweights. And then let's look at Infosys. Now, there is some hope in the market that Infosys and TCS and other IT stocks will be used to prop up the long side of the Nifty. And this is where Infosys stands, still below 200 DMA. So it's very, very hard to expect that the Nifty will restart its onward march, given that the three heaviest weighted counters are below 200 DMA. But Infosys can be used to sort of slow the fall of the Nifty. So this is how the major charts of Nifty intraday as well as major index bearing heavyweights are concerned. Let's shift focus to Bank Nifty, and exactly as you saw yesterday in the Nifty, the same thing happened in the Nifty, for Bank Nifty. The first thing you'll see is the daily chart, the Nifty ending again at its days, the Bank Nifty really ending at its day's low, taking support from the 50 and the 20-day exponential moving average. Now look at the intraday chart. The same thing happened. First 45 minutes of trade, the 3 15-minute candles were in the green, and then the selling started. So looking at the options range, Nifty Bank, because it's volatile, it has a 1,000-point trading range. We've seen maximum put OI at 44,000 and a resistance coming in at 45,000. So that's the structure of both the Nifty and the Bank Nifty. We are likely to slip lower in trade today, it being Friday. Trade is likely to be skittish, volatile, and the fact that you have the weekend ahead, it will also be fairly light. So we are looking at a support of somewhere like 19,200, 19,250 on the Nifty, given the option change strength there, and somewhere like 44,000 on the Bank Nifty. These are not intraday levels, but these are levels where good supports are seen emerging. So if you see a gap down, I would suggest that you remain on the sideways because it's the end of expiry, the end of the week. So it's going to be a bit of a problem. At the same time, what's really interesting is that we've seen a very, very sharp rally coming into mid caps. The interesting point is that in the month of August, you've seen the Nifty mid cap index rise about 4.8%. And that's something fantastic. It's at a record high. So are the small cap indices. But that's how markets are. Blue chips are down, and mid caps and small caps are doing a very, very strong work on the long side. Okay. Beyond this, before our guests join in, let me tell you, it will be Mayuresh Joshi from Market Smith India, as also we are going to have Ashish Chaturmota checking out the charts he's with the JM Financial Services. Nevertheless, let's pay attention to what's happening in the space for futures and options. I have deliberately not kept many stocks today, it being Friday and the market being extremely edgy, but 2 or 3 stocks that have sort of attracted my attention have been from the fertilizer pack. The first thing that we'll see on the charts is of course GNFC, and GNFC is Gujarat Narmada Fertilizer Corporation. Apart from it being a government company, it's from Gujarat, and it's shown a fairly strong traction when it comes to the development of technical indicators. Let me highlight them. The stock ended 1.5% higher, and this rally was accompanied by a very sharp short covering. That means given the strength of the counter, the bears are now cutting their positions, and that is the reason why open interest fell in yesterday's trade by 4.8%. Delivery statistics are not as fantastic as the ones that you see, and that's the reason why things are looking bright on GNFC. Apart from that, you can also have a look at Coromandel International, again a fertilizer company, and what's really interesting is here also you've seen fairly strong data developing, 2.6% higher in terms of price, 1097, and the open interest has surged by about 19%. The chart of Coromandel International is in front of you, and that's how it is. 1095 is almost a record close. You've seen similar levels coming in September of 2022, but a breakout trade most likely on Coromandel International somewhere in the next week. Apart from that, all other fertilizer stocks in the cash segment are also showing strong charts. So it's a sectoral move that's coming in as far as GNFC and Coromandel International are coming in. Let's look at also one more important setup, which is crude oil, and the crude oil futures are in front of you. Again, a bounce coming in from 200 DMA, but what's really good is that crude oil has corrected from $85 per barrel somewhere in the early part of August to about 79. This is a good development as far as markets are concerned locally, but given the strength that you see of 200 DMA, let's see what happens now. But for today's trade, it looks at 79.22 around 200 DMA, a support level, so you just might see a bounce coming in from current levels. So these are the stocks and indices that we are watching at. This is the broader commentary for the market. Weak, skittish, ahead of the weekly ahead of the normal Friday close that you see. And what's really interesting is that yesterday's downtick was utilized by our foreign friends to push in aggressive purchases. A very nice number coming in of about 1,500 crores from foreign friends, and a very, very strong number coming in from domestic institutions, 5,796. Remember, this will also include the Coforge transaction, in which 26% stake exchanged hands from the parent into some very well-known mutual funds, and that's the reason the transaction was worth about 4,119 crores. So that number is reflected in such prices. There's the US market update in front of you, a very sharp downtick coming in ahead of the Jackson Hole event in Wyoming, USA, and the result of that will be known by Friday night on Wall Street, but we will react to it on Monday, and it seems that the reaction is already on way, given the way Gift Nifty is indicating. Similar is the setup across Asia. Like I mentioned, it's the weakness that's creeping into Japan, into South Korea, into Hong Kong, into the Chinese markets, and you can see it's a fall of between 0.4% and 1.9%. The Nikkei, Japan's Nikkei being the most adversely impacted. We'll wait for our friends Mayuresh Joshi and Ashish Chaturmota to join in, but it's as good a time as to look at what were the winners in yesterday's trade in terms of all-time highs, and you should look at data in this particular sector, because this is where a lot of momentum on the long side is building up. BEL was at a record high yesterday, 134.40, and some defense transactions have been announced late evening post market close. So this is one stock which is likely to remain in strength mode. Apart from that, you saw fairly strong traction coming in another PSU company, RECL. It shut shop at 243.50. You have very strong ticks coming into IDFC, as also into Tata Communications, Coromandel International, which I discussed, Axis Bank and Bharat Forge. Apart from that, we can also look at stocks that lost ground on the Nifty yesterday. Of course, they were led by Reliance, down about 1.7%, 2479. We've also discussed the chart there. The stock ended sharply below 200 DMA. This is not a good development. Apart from that, you see the weakness in global crude oil prices reflecting adversely on ONGC. This is our top crude oil producer. The index, the stock went down by 1.3%, 173. Similarly, Divi's Lab, LNT, Grasim and JSW Steel were other stocks that pulled the Nifty lower. One look at stocks that sort of helped the Nifty and the futures and options market gain some trajectory on the long side. They were, of course, Coforge. One would have imagined that given the nature of the transaction where the parent is executing, the counter would have sort of slipped fairly sharply. It did in the initial part of the trade, down about 2%, but then it whipped up, ending about 5,400, up 9.7%. Coforge, a mid-sized IT company, was the top gainer in the F&O pack. Strong traction coming into airport company JMR Infra. Again, emphasis from the software pack, giving momentum to the mid-cap IT space, and of course the winner that's there for the last the last entire month of August, which is Escorts, up about 3% to a fresh record high, 2,988, and this is also the top F&O gainer in the auto pack. As good a time as any to welcome our first guest, Mr. Mayuresh Joshi. He's the head of research at Market Smith India, has a very strong grasp on the fundamentals of the market as also on technical charts. So good to have you, Mayuresh. Welcome to BTTV.
Good morning, Shail sir. I think always a pleasure to be on your show.
Wonderful. So let's kickstart. Not a fine day to have a Friday morning. I'm actually looking more towards the evening and the statement that's coming in from the US Federal Reserve. But sentiment is not good on our Dalal Street. How are you looking at the markets?
So to put it in context, obviously the macros in terms of how the yield movement has been, the 2-year, the 5-year, the 10-year in the US context has been a little bit unnerving for the global markets as well. You did see some elements of reaction come through for the US markets yesterday and the European markets as well. But to a large extent, I think the kind of expectations that one really has from the US economy at this juncture, that it really will be a soft landing in the worst case scenario, I think that is probably something which is a sign of respite. Now, whether rates will last longer in the US, I think that is a huge question mark. And I think a large part of the consensus is pointing for a larger part of the rate cycle to remain constant where we are. And rate cuts obviously getting delayed to the second quarter of the next financial or the next calendar year as a bear case scenario. I think the markets will have to live with these facts. China obviously going through a deflationary phase as we speak, and the slump that we've probably seen both in the real estate market and the banking system as a whole is probably causing ripple effects in those markets as well. On both these contexts, Shail sir, I think the Indian markets are rooting are looking relatively better placed. Earnings have also probably held us for most sectors for the Indian markets. And therefore, I think even if there is a deacceleration in terms of FII stroke FDI flows, both in terms of readjustment to the fixed income markets globally, and specifically the US market with the yield movement that we've seen, I think Indian markets will still continue to fare relatively better. Do we see the brunt in terms of some pain that the markets will witness because of the global factors? Absolutely, yes. The distribution day count, as we see in Markets with India, is elevated, and therefore having a little bit of a cautious approach in the markets at this juncture and not be too adventurous as things will settle down over the next few weeks will make a better entry points for selective sectors within the space. Obviously, valuations a tad bit on the higher side. So I think the next few weeks, if a correction does come through, will also provide respite on the valuation front and better entry points as we move into the second.
Well, Mayuresh, this is slightly a question aimed at maybe the medium term, say 2-3 month kind of a horizon. We've seen a very sharp rally in mid caps. Comparatively, the mid cap index up 4.8% in the month of August so far, and we are still on the 25th. It's at a record high. The valuations are completely off the whack, and this is when global macro, local macro is not looking good at all. What is your sense? Is it a time to move maybe 50% or less or more into cash, book these wonderful gains that you've had thanks to a fantastic rally in the mid caps, or and move that money into some blue chips, or just ride the rally? How do you look at it?
So to that extent, I think mid caps obviously have done exceedingly well, and the momentum probably the broader market continues. You're absolutely right. I think the forward valuations for the mid cap index now at 25 and a half times. The average standard valuations or standard deviation means for the index is around 24 odd times. So yes, richly valued as we speak at this juncture. At Markets with, we are regularly booking profits, Shail sir. So our take is that it's better to have money in the bank rather than just having it in terms of a notional kind of gain that you probably witness. If the markets do give a big shakeout in the mid cap index, which has fared exceedingly well, I think the cuts can be relatively bigger and larger. So we are trimming our positions as we speak. Whether we move that to large cap at this point of time, as I said, I think we are selective in terms of domestic cyclicals even now because the earnings will probably hold up. Large caps, as the markets go through this short-term correction stroke consolidation phase, will appear relatively better. And therefore, I absolutely agree. I think as the next few weeks unfold, there will be better opportunities in the large cap space. And therefore, whatever profit booking that we are probably doing within the broader universe, being selective there as well. I think certain pockets are looking attractive. I think in the next few weeks as we speak, some part of the money can definitely be moved.
Right. The one cardinal and fundamental truth in the market of any kind of asset, whether it's equities, bonds, real estate, crypto, anything that drives money or is run by money, is a reversion to the mean, which means that whatever has shot up dramatically will come back to its normal mean, and whatever has gone down dramatically will again come back to its mean and resume the normal trajectory of earnings growth as far as equity prices are concerned. I just want to highlight the mid-cap space and mention some stocks where you've seen very sharp rallies coming in the month of August. Of course, starting with Escorts, the counter up about 20% in the month of August to a record high of above 3,000 rupees in yesterday's trade. Look at Trent, breakout numbers, and the markets really appreciated it. Trent is up 20% in the month to a fresh record high of 2,068. Bharat Forge, amazing parentage, the company running very high on steam gathered because of defense contracts. 1043, the counter has appreciated 15.7% in the month of August. So these are the kind of run-ups that we've seen, and typically such stocks correct before they resume their upward trajectory. But it was our point to put this across to you in case you are thinking of taking fresh positions at this present moment. Mayuresh, given the fact that mid caps have sort of gone beyond the pale of normal statistical moves, where do you find value at this point of time? Is there a specific sector or a stock that catches your interest for the medium to long term as a portfolio pick?
Oh yes, I totally concur with your assessment of the overall markets, Shail sir. I think paper sector at Markets with India, I think our take is that this sector might come back into focus as we are speaking. I think 2-3 cyclical factors that probably are aiding the kind of momentum that we might witness in this sector as a whole. One, integrated players within this space have better access to both raw materials, which have shown large amounts of volatility as we speak because of the monsoons that we probably also witnessed, large parts of it in North India, some deficit that we are seeing in the other parts of the country, and the element in terms of captive power production or power consumption as well. The second element in terms of the demand-supply dynamics, as we are going through this change, and if El Nino conditions do play out, integrated players have upped their production processes as far as the water consumption is concerned, and therefore brought it down greatly to around 40 cubic meters to produce 1 ton of paper from 200 cubic meters. A lot of the facilities which have not integrated do not have this do not have this convenience at hand, and therefore I think would find it extremely difficult to probably produce the paper in the quantities that they have, and mills probably operating at optimum capacities. The power capacities also from their pulping process, which produce biomass for integrated players, have greatly aided their EBITDA and reported EBITDA per ton that they produce along with bottom line growth. And therefore, paper prices, in our opinion, might start heading northward. You've already seen some articles where there has been increase of around 8 to 10 odd percent. It might probably go up further as we head into the second half. Having put this in context for the sector, our sense is that Orient paper probably looks attractively placed. 1 lakh MTPA of capacities, 50 MTPA in writing and specialty paper, 50 MTPA in tissue paper, where it's a market leader, both in the domestic and as far as exports are concerned. The pulping capacity, in-house pulping capacity is sufficient enough to probably ensure that the production processes run at optimal capacity. It's got a 55 megawatt captive power plant, which reduces the power intake. And therefore, I think on a reported EBITDA, absolute basis and reported EBITDA per ton basis as well, the company can report better numbers because it's a fully integrated player as far as these raw material and processes are concerned. From a balance sheet perspective, obviously debt is not too large. What that reported for the whole year last year was around 4.68 rupees in terms of EPS. They've already done 1.5. So going by the record Q1, which is supposed to be a weak quarter, and where the recovery in the second half with festive season coming through and the expectations of consumption going higher, they can easily report an EPS of 6.25 odd rupees. Valuation is very, very attractive at this juncture, and a dividend yield of 11% makes it even more attractive as you speak. So I think Orient paper and the paper industry as a whole, Shail sir, looks a little bit more attractive at this juncture in the broader.
Right. Before we welcome Ashish Chaturmoda to the show, the pre-open rates are in front of us. The Nifty, surprise, surprise, opening 36 points higher at 19,416. And this is what I meant by volatile and choppy trade. You will see it slip lower as we progress. But so far, let's look at the numbers. Adani Ports and Adani Enterprises are the two main gainers as far as the Nifty stocks are concerned. 1.5% higher on Adani Enterprises, 2580. Adani Ports 0.5% higher, 827 in front of you. TCS 0.3% higher, 3400. HDFC Bank 0.7% higher, about 1590. The Nifty flattening out completely now at 19,362, a downtick of 21, and over time you'll see this number worsening. Let's look at F&O, the stocks which should be ticking higher. BEL, as I mentioned, 1.7% higher, 136.50. Fresh record high here. A lot of enthusiasm coming in. Helicopter transaction done for a particular product by the Indian establishment wanting to buy it off BEL, and that's the reason for today's enthusiasm. Fresh record high on this particular counter. We have stocks such as Indiabulls Housing Finance, 1.4% higher, 161. We have Tata Motors ticking 0.6% higher, 615. Bajaj Auto, Hero Motors in the green. So this is the build-up that is happening for the August numbers that will be coming on the 1st of September. So this is something that you need to look at. And the Nifty now worryingly down at 131 points at 19,255. I had mentioned in my earlier commentary that that is a very, very strong support when it comes to options data. But a better and a far more intelligent man on technical charts has joined us, Mr. Ashish Chaturmota from JM Financial Services. Ashish, it's going to be a very good day as far as friends are meeting online. That's you, Mayuresh, and me. But the markets are in a very bad shape. Nifty down 130 points, 19,250. Mayuresh commented on the fact that macro is looking weak, and probably you'll see a downtick, and that's happened. What do you make of this?
So I think, good morning, Shailji. Good morning, Mayuresh. I think, we have to look market not from a Nifty's perspective at this point of time, because if you look at Nifty as an indices, then one might feel that there is a lot of profit booking which is happening in the market, and we are already down good 3.5–4% from the peak. But if you ask me, Shailji, if you look at month-to-date performance of Nifty 50, which is down almost 1.63% till yesterday. If you compare it with Nifty mid cap, it is almost up 1.86%. And surprisingly, in this last 20-23 days, BSC small cap is up 3.28%. So the real action which is happening at this point of time is broadly into small cap indices. Now, if you go into little more detail of how small cap as indices are behaving in a longer term time frame, so one might feel that in the immediate short term, Nifty small cap has given a phenomenal return, and it might indicate that it has become extremely overvalued or maybe overdone in terms of its rally. But what we need to understand is that if one look at Nifty small cap as an indices from 2018 period, then logically this overall space, small cap space from an index perspective, has delivered an absolute return of 24%. And a 24% in a 5-year journey from 2018 to 23, which actually translates into hardly 3–4% kind of CAGR return in small cap and mid cap on a 5-year basis. And that's the reason, despite index seeing some correction in last couple of trading sessions and broader market seeing some profit booking, small cap, mid cap as an indices or as an space is doing extremely well. To add, obviously, it is also driven by the liquidity flow which we are witnessing. There is a lot of churn in the mutual fund industry also we are witnessing, where flows are shifting from large cap to small cap, mid cap, and that's the reason my sense is we are going to see significant amount of outperformance coming from this space in days to come. So maybe some consolidation at this juncture, but small cap and mid caps are going to outperform the broader market. As far as Nifty is concerned, my sense is till the time we are above 19,200–250 levels on spot levels, my sense is we are in a comfortable zone and might trade in a range between 19,250 to 19,600. But in case if we breach this 19,250 because of the global concerns, where we are seeing some profit booking in US markets, in Chinese markets, then there's the profit booking can extend till 18,800. But my sense is there is a strong possibility this 19,200, 19,250 support levels can be seen as a very, very strong support zone for markets.
Right. And 19273 is right in front of you. Ashish, before you joined in, Mayuresh and I were discussing the very sharp rally on mid caps that you've so rightly pointed out is because of long-term outperformance. And he had picked Orient Paper as one of his preferred portfolio trades, which means that you buy and hold for a while. But at the moment, it seems that 19250 is something that is likely to hold. The Nifty clawing back 50 points. 19,300 in front of you, 84, 85 points lower in pre-open. Before we get into the dynamics of stock picking, I'll highlight a couple of points. Reliance down 1% in trade, 24.55. Remember, it's now firmly below 200 DMA. Infosys down 0.7%, 14.13. What else is looking weak? ICICI Bank down 0.6%, HDFC Bank down 0.3%, SBI down 0.5%, Axis down 0.75%. So this is how the top structure, the top heavyweight structure of the Nifty and the Bank Nifty is structured. The Bank Nifty is showing a downtick of 220 and the Nifty is showing a downtick of 90. Given the mayhem around us and the fact that Ashish bhai, you watch charts very, very well, what are the one or two stocks that you're looking on the long side or the short side, whatever you prefer?
Sure. So, first of all, as a disclosure, whatever stocks I'm going to speak, we have interest in our PMS. We can have exposure in these names. So one has to be, when we discuss ideas, one need to keep this in mind. So as far as, some of the names, first of all, IT as a basket is showing very strong traction, and particularly, Shailji, it's a mid-cap IT, where we are seeing a lot of traction. My sense is within this space, there are two names which comes to my mind. First of all, it's a mid-cap IT name which is Persistent Technologies, which we like. And I think structurally, if you look at this is one stock which has been consolidating near its 52-week high for almost, I would say, good last 7-8 months, and despite the fact when we saw a lot of profit booking coming into large cap IT, and as far as Nifty indices is concerned, so this kind of relative strength clearly indicates that in a falling market, that is when IT as a sector was seeing a lot of profit booking, Persistent was showing a lot of stability. Now, when we look at the performance of Persistent, this is one company which on the digital side has been seeing very strong quarter-on-quarter constant currency growth, and this was a reason why, despite the selling which we witnessed in other names, our Persistent has been continuously holding on upside. Since we believe that now after seeing underperformance for good 2 years in IT, now there are some signs of stability which might come in. There are a lot of reports which are saying that now we are going to see almost 8 to 9% kind of quarter-on-quarter growth, which we are going to witness in selective IT companies. And if that is the case, then companies like Persistent could see significant re-rating. On a pure technical perspective, my sense is at 5,4980, there is a very strong base building which has happened in Persistent. So keeping this in mind, my sense is Persistent is headed towards 56-5700 kind of zone in the next 2-3 months time frame. And if one is looking from a very shorter term perspective, then even in that situation, my sense is 53 to 5400 is on cards in the immediate, I would say, 3 to 4 weeks time frame. So my top pick in the IT space would be Persistent, followed by Larsen & Toubro Technology Services. Here again, my sense is if you look at the entire ER&D space, so whether it's Tata Elxsi, which is quoting around, I would say, 60 PE multiple, or KPIT Technologies, which used to be our all-time favorite, which is trading at current levels around 75 PE multiple. But if you look at Larsen & Toubro Technology Services on a trailing basis, is quoting at 37 PE multiple. So this gives us a lot of comfort from a valuation perspective. In terms of operating margin, the operating margin is in a range of 19 to 20%, which is very much comparable with the margins of companies like KPIT Technologies. And because of diversified business base, my sense is LTTS is a very, I would say, is in a very comfortable position at this point of time. Purely from a technical perspective, if you look at this, is a good 1 year consolidation which LTTS has completed, and yesterday it hit a 52-week high. So 4200 is a level where very strong base building has happened in Larsen and Toubro Technology Services. And my sense is on this upside, a stock is poised for a move towards 5000 kind of trajectory, which implies good, I would say 12 to 14% kind of upside can be seen in the stock from current levels.
Right. So these are the two stocks in the mid-cap IT space. And I'd also like to highlight the fact that a very well-known mid-cap IT management from Nucleus Software, Mr. Vinod Dusad, will be joining us as the corporate guest somewhere like 9:45. And all the trends that have been highlighted by Ashish Bhai, we'll take a look at them. So these are the three stocks that we have an eye on. L&T Technology Services at about 43.95 is what Ashish Bhai is preferring on the charts. Persistent Systems 5119 in front of me as far as prices are concerned. Remember, the all-time high for this counter is 5231, which was there in the month of June, 5th of June to be precise. And that is likely to be taken out. As far as Mayuresh Bhai is concerned, he's pointed out Orient Paper. Now, two or three things very wonderfully dive into this. It's a wonderful sectoral call at about 50 rupees. The counter again moving towards the upper trajectory of its all-time high. The all-time high for this counter is 57.92 that we saw in the month of December 2017. So a 5-6 year high already. And Mayuresh feels that this is a delivery that you need to pick in trade. Ladies and gentlemen, 9:13. Ashish Bhai is still with us. Let's do some stock picking with him on the charts. Weakness in Reliance, Ashish. What's happening?
So my sense is, Reliance is in a complete range-bound, trade, and as a disclosure, we hold this stock in our portfolios. But if you look at the relative outperformance against the broader market, it has been continuously underperforming. And despite the fact we saw listing of Jio and there is a positive news flow with regards to Reliance Retail, we are not seeing the same amount of buying interest which ideally should have come to the stock. So my sense is this clearly indicates there is something which is discounted into the price, and ideally 2450 is going to be a very strong support zone for the stock. Even if it hits these support levels and hold on, despite this, I believe that the stock is going to trade in a range unless it decisively crosses 2600 levels on a closing basis. And that gives me a sense that ideally 2450 to 2600 is a broad range for Reliance in days to come. If we see a breach around these levels, then ideally we might see some volatility which might hit the stock. Otherwise, it looks sideways.
Right. Mayuresh, the demerger with Jio Financial Services not sort of working intermittently or immediately on the charts, lower circuits there as well, and the mood completely soured on Reliance. A short view on the stock before markets open.
GRMs have bounced back, Shail sir. So I think it's almost $12 now. And therefore, I think the refining margin should be relatively better in this quarter and the next. Retail holding out, you've already seen a good deal happen on retail. Jio's numbers per se standing out in terms of ARPU improvement. And the core petroleum business expected to show significant increase in volume. So I think overall second half numbers should be relatively better for Reliance.
Okay. And as good a time on Friday morning to look at the initial ticks that are coming in. Nifty's open 120 points lower, 19,267. Nifty Banks open 300 points lower, 44,200. IT's down 200 points, the index at 30,914, and the mid caps down about NSE 500 at 84 points at 16,845. Let's look at the heavyweights first, and it is not looking good. Reliance down 1.2%, 2448. ICICI Bank down 0.75%, 962. Infosys down 0.7%, 1413. And HDFC Bank down 0.5%, at 1570, and that's the reason why you see the Nifty ticking down 120 points, 19268. Remember, 19200, 19250 is a very strong options support. Let's hope it holds on. Now moving on to F&O immediately, which are the top gainers. India Bulls Housing Finance 2.3% higher, 162.65. BEL taking it away 1.4% higher, 136. I want to watch out for IT stocks, as our friend Ashish Chaturmota had suggested. I'm looking at Persistent. No, I can't see it at the moment. Anyways, we'll focus on it a little later. I want to see how Persistent has moved. My apologies, I can't look at it as of now. Anyways, the heaviest traded counters in the F&O space are Reliance, down 0.9%, 24.57. HDFC Bank in the red, 0.7% lower, slipping further, 1568. BEL up, India Bulls Housing Finance up, Coforge down 0.5%, 5360. Let's look at how the defense stocks are moving. Let's look at high beta first. Okay, Paytm, a transaction due, 1.7% higher, 919. Policy Bazaar 0.8% higher, 757. Vedanta 1% higher, 704. HBL Par down 0.5% at 287. BHEL taking it away 0.3% higher at 108. The stocks that I also want to look at are Orient Paper. Let me just see how is Orient Paper behaving. 1.3% higher at 5080. These are the price points that you need to look at. Let's go to Ashish first. The Nifty down at a very strong support level, 19265. Ashish bhai, a downtick of 120. What would you do?
So as I mentioned, Shail bhai, 19200, 19250 is a very critical support zone. We are around those levels. In case if we today breach this 19250, 19200, then definitely this profit booking can extend till maybe 18800 kind of trajectory. So we need to watch these levels very closely, as these are very important support zone. 19250 would be my first point of our support zone. If it breaches, then ideally we should be little cautious, and in case if we sustain below 19250 and 19200, then ideally this profit booking can extend to till 18800. So I think we are near support zone. We need to be watchful of this trend, but still we are seeing a very good traction in the small and mid cap as an indices, and a few names which looks good to me. So first one would be on a NBFC space. I think Shriram Finance is one stock which looks good. Again, as a disclosure, we hold this stock in our NBFC space. We like Poonawalla FinCorp and Shriram Finance in the NBFC basket. So I think there is a good amount of buying interest which is there in the stock. Stock is available at 1.2 time price to book. In terms of its valuation, we are seeing almost 17-18% kind of credit growth, and I think with these kind of valuation comfort, if you look at the technical charts, the stock has been consolidating for good 5-6 years, have not delivered any significant return against its peers like Cholamandalam Finance. So I think now there are a lot of traction which is getting built around this counter. So 1800 is a strong support zone. If we manages to hold these levels, then I think 2100 to 2200 are the levels we are looking on upside in Shriram Finance in next 3 to 5 months time frame.
Right. Let's touch base with Mayuresh. Again, the market now sort of moving in that vicinity of 120 point drop on the Nifty, 250 point drop on the Bank Nifty. Anything that catches your interest, Mayuresh? Orient Paper taking it away 1.3% higher, about 51. Where would you sort of induce short-term buys at current correction levels?
So to a certain extent, Shail, I think I would totally agree with what Ashish bhai just said. You're probably looking at the IT sector supposed to probably create some sort of a support for the markets. The expectations, as I said, largely of a soft landing in the US pending curve should probably just stabilize and head northwards. That is the base presumption that the street is expecting for the sector as a whole. Most commentaries, whether it's mid-cap IT companies or large caps, have not indicated any pricing pressure on the sector as a whole. And therefore, I think if order books remain stable as we head into the second half, and as EBIT margins will start stabilizing as well, a large part of the recognition in terms of the wage hikes largely behind in the first quarter itself. You are expected to see some element in terms of resilience come through from numbers both reported in constant currency and dollar terms. And therefore, I think as a safety benchmark, somewhere the IT sector probably is holding out. One stock within the sector, I think, Oracle Financial, strong product stroke platform companies, apart from the stocks Ashish Bhai mentioned, strong dividend yield and the expectations in terms of strong order book continuing both from the parentage and the local business as well, should augur well in terms of the overall balance sheet dynamics.
Right. And Mayuresh Bhai, what's really interesting, you talk of Oracle Finance, Ashish highlighted Persistent and L&T. But what's up in trade is an old favorite of ours, Birlasoft. Let me just go to Ashish first. We've at least I've grown old discussing this stock, as also KPIT Technologies. Mayuresh, let's give Ashish the first take at Birlasoft. What do you think, Ashish? Fantastic rally we've seen from the month of April when the stock was at 258 and now at 484. Your views?
So one of the strongest charts, Shail Bhai, in the entire IT as a space. My sense is, the way it has seen the recovery from 310 to almost 480 now. It is one of the strongest outperformer, and in an environment where most of the IT stocks are still struggling at a lower end, where they have corrected 25-30% and trying to see some recovery of 4 to 5%. In that environment, this stock is almost 60% up in a very, very short span of last 1.5 months time frame. And this outperformance will continue because, as we speak about relative strength, I think that relative strength is playing out extremely well. My sense is this is headed towards its previous all-time high, which is around 580, 585 kind of trajectory. So one can see another 20-25% kind of upside coming into Birlasoft in next, 3 to 4 months time frame. So, and one more thing, from a pure retracement perspective, we also wanted to see that how the retracements are playing out. So keeping that in mind, the 61.8% retracement was around at 450 kind of zone. So now my sense is in the longer term, medium term, this 450 becomes an extremely important support zone for the stock. Till we are above 450, 457, my sense is this is heading towards 585, 590 kind of trajectory.
Right, and 580, 590 was the previous all-time high of Birlasoft that we saw in that fantastic rally of 2022. We are at 484, but the charts talk about a lot of good things. Mayuresh, mid-cap IT, let's not talk about valuations because that sort of, disturbs the overall thought process where the technical chart is screaming a buy and the fundamental numbers point to some caution. Your view on Birlasoft?
I think we have discussed it ad nauseum, Shail sir, in the previous few years. You, me, Ashish Bhai discussed it so many times. I think the stupendous run-up for Birlasoft KPIT stems with the fact that their order books are screamingly saying that irrespective of what probably happens in the West, a soft landing, a hard landing, what happens in Europe, order books are increasing. Their clients are showing increasing interest in terms of digitalization and the entire platform-oriented processes that both companies follow in terms of EV mobility is a strong sign that spending is expected to continue for all these players, and therefore order books for players like a Birlasoft KPIT expected to grow as we head into the next few quarters. Apart from the order book, the execution has been equally exemplary as well, Chelsea. So I think if you probably look at how the revenues have played out, and the management commentary sounds very, very optimistic. They're saying that the constant currency revenue growth, and even in dollar terms, is still expected to grow in higher double digits. You're probably expected to see EBIT margins stabilize for both companies going forward. And in an environment where we are probably talking about some softness coming through, there is no softness probably for certain pockets like ER&D spending, where Birlasoft, Sonata, and even KPIT probably exist, will very well continue. Valuations, as you rightly pointed out, sky high, but I think the momentum continues, so enjoy the ride.
Absolutely, absolutely. And there is no doubt in my mind that when Ashish Bhai picks up mid-caps and specifically the IT space, you will see good fireworks. Yes. So persistent L&T Technologies as far as Ashish Bhai is concerned, and Oracle Financial Services. Now remember, these are high beta stocks and also high ticket items. There is nothing the three of us or anybody else in the market can do as far as prices are concerned, because they are handmaidens of bull markets. 4 digits, high 5,000 rupee stocks, 4,000 rupee stocks, 3,000 rupee stocks. And the only comfort that I can give you is that stocks that double in a bull market double further, provided the quality of the balance sheet and the quality of the management is superior, if not better than what it was in the previous bull cycle. And all these three stocks that we've discussed fall in that category. Ashish Bhai and Mayuresh, I'd also like to take a view on Jio Financial Services from you. Mayuresh, you first. Successive downticks, 5% circuit over the last 4-5 days, and now at 200 rupees. Of course, these are regulatory rules that keep the stock in the Nifty. As long as circuit lagega, tab tak ye stock Nifty mein rahega. That's the rule. Where do you find, Mayuresh, value in Jio Financial Services, which might result in the down circuit coming off?
So I think a large consensus, Shelter, was that looking at how the positioning is, 170 to 190 had been a rough area that most analysts had. And if the estimates are based on certain presumptions going forward, if it comes in this range, it should start stabilizing. So somewhere I think the valuations in terms of the pre-discovery price a few weeks back had inflated valuations, comparing it to companies like Bajaj Finance, which has an established business model over a periodicity of time. I have no doubt in my mind, Jio Financial over the next few quarters and years will turn out to be a successful financial engine for the Reliance Group as a whole, because of the infrastructure, the platform support, and the tech support that it will probably get. But at this juncture, when the strategy itself is not clear, when it is not clear what the management intends to do as the first and the preliminary services and how they plan to scale it up, what kind of a book are they targeting, it becomes a little bit ambitious to probably give it those valuations. So if it comes in that range of 170 to 190, my sense is that the prices should start stabilizing shares for Jio.
Right. At 202.80, it's again down 5% in trade, Jio Financials. And remember that something like 14 crore shares had to change hands from the passive fund selling, those who track the Nifty. So far 7.75 crores have changed hands today. Let's see. Ashish, coming to you on JioFin, you mentioned that Reliance Industries was a portfolio stock in your PMS service, and by default you would have got an allotment of 1:1 on JioFin. Are you also amongst the sellers who have a very, very long line on the large street when it comes to JioFin?
Well, first of all, Sharma, so if you look at our weight in Reliance is a significant underweight position as compared to what Reliance holds in a NSE 200 or maybe Nifty 50. So maybe almost 8 to 10% weight of Reliance. But if you look at our portfolio, our positioning is very underweight as compared to the index. Then if we speak about Jio, that's the reason we get a very small allocation of JioFin, and that's the reason we are not too much worried about this volatility. Second, this sell-off which we are witnessing is more of a technical sell-off which we are witnessing, because a lot of these ETFs need to sell, because they are this is not going to be part of Nifty 50, and that's the reason this kind of selling we are witnessing. You already mentioned 14 crore shares are there for the on the supply side. So unless we don't see this supply getting absorbed, this is going to be the phenomena. Once this gets absorbed, you might see the same amount of velocity coming on the upside, and that's the reason my sense is it's just a temporary phase where the stock is seeing some correction. As far as long term potential is concerned, we are confident that the stock will create a lot of wealth in days to come. So ideally, in a dip, when we will see some stability coming into the stock, we will be in a position to average more on our long side, rather than worrying about exiting when this is under pressure.
Right. Let's touch base with Mayuresh. Mayuresh, your stock is doing amazingly well, up about 4%. Orient Paper, volumes are substantial, about 14 lakh shares traded at this price point, 52.50 in front of us, almost a fresh record high. Today's circuit is 60.15. I don't know whether that will hit or not, but great going. Mayuresh, before you leave us for the day, you maintain this buying stance?
Yes. And as I said, I think the dynamics are looking absolutely good for this sector. You have to play the cyclicality for all these cyclical stocks, and I think the cycle is turning in this case.
Okay, and it's just not Orient Paper that's showing an uptick. West Coast Paper, one of the finest companies in this particular space, is also raising its hood. 615, the stock was at 480 in 10th of August, and you see 620 on the price. So these are exciting times for paper companies, and Mayuresh's pick is in that sweet spot, below 100 rupees, very high beta, great, how should I say, tailwind coming in from the sector, and of course his genius being appreciated by the markets. I believe that is the amount of time you have for us, Mayuresh, today.
Yes, I think I have got a call to attend, Shail, sir. I would have loved to continue.
Absolutely. Have a nice Friday evening, although we don't see much goodness coming into the main indices, but all of us are great lovers of mid caps and small caps, and August has been something to remember for a very long time. Have a nice day, Mayuresh. I'll stick around with that, Ashish.
Thank you so much, sir. Thank you.
So Ashish bhai, of course the markets will turn. It's not as if that the Nifty will forever remain at 19,200. We just might see a small dip coming in towards maybe 19,000, 18,800. But of course the overall structure of the bull market remains in place. What are the 2 or 3 stocks in the blue chip sector, Ashish bhai, which you have on your radar? Further corrections of 2, 3, 4%, and you hit a staggered buy.
Definitely. So in the blue chip space, my top pick in the capital goods space would be stock like Siemens. Again, a disclosure: we hold this stock in our portfolio, in our capex or manufacturing theme. We firmly believe this is one story which is a big beneficiary of the entire capex which we are witnessing in the country, including railways. So and the stock has reasonably consolidated for good, I would say, last 3 months time frame. Formed a very strong base around 36,000-37,000 kind of trajectory, and there is an increased amount of participation from the volume as well as delivery activity in the stock. So my sense is this is one stock which should be bought, which could be looked as a very strong candidate. On upside, I'm expecting stock to cross its previous all-time high, which is around 4,100 kind of trajectory, and eventually it should hit somewhere close to 4,300 kind of zone in next 2-3 months time frame. So my top pick in the large cap space would be stock like Siemens. Again, in the consumption theme, I think Titan is one stock which we like. So I think this is one stock which has been consolidating for last 4 or 5 weeks. But if you look at in comparison with the broader market, it has been relatively outperforming. My sense is 2980 3000 is going to be a very strong support zone for Titan. And the way this stock is positioned, and we are seeing some signs of strength coming into gold and silver, so which is also a good indicator that this could positively impact stocks like Titan. So Titan is well positioned for 3350, 3400 kind of trajectory. So in Siemens and Titan, these are the two names in the large cap space which looks quite promising from a immediate shorter term to medium term perspective.
Right. So infrastructure play Siemens, a German company which has seen better days on the charts, is what my Ashish Bhai will look at. 4065 was the most recent all-time high. The stock corrected till 3600 and is now back up over the last 7-8 days. A further correction, if any, is what makes it interesting for Ashish Chaturmoda and his BMS Titan. Of course, the market darling as far as the consumer plays are concerned, jewelry maker, watchmaker, and all that is working very well in the aspirational part of India. 3200 was the most recent all-time high somewhere in the first week of July, and we saw the stock correcting at 2890 somewhere a month later, and now at 3057. Ashish Bhai feels that this one merits a buy. Ashish, two sectors I want to catch your attention on. Defense, it's just running away. We've seen rallies in our lifetimes, but I can assure you, apart from the dot-com bubble that I saw somewhere in 99, 2000, I haven't seen these kind of substantial price rises ever. What catches your fancy in defense, and how are you tracking it on the charts?
So I think yes, definitely, Shail Bhai, we have to see it in conjunction with what's happening on the entire defense budget, on the defense order book, and the execution capabilities of these companies. So we have seen good traction coming into stocks like Hindustan Aeronautics, BEL, BDL, and even stocks like Mazgaon Dock and Cochin Shipyard. What we need to watch now is what is the order book for most of these companies, and what is the revenue visibility in next 3 to 4 years time frame. So all the companies where we have an order book of more than 6 times at this point of time, they will have a very significant revenue visibility at least for next 2-3 years time frame, and that's where eyes are catching on. So my sense is first stock which comes to my mind is Bharat Dynamics Limited. If you look at the current top line of the stock is close to 2800 crores, but if you look at the order book, it is almost 24,000 crores, which gives us a revenue visibility of almost 9 times. And if we see this kind of order book, we can safely assume that company is going to see 24-25% kind of top line growth with 20% EBITDA margin, and that gives us a lot of confidence in stock like Bharat Dynamics. From a pure technical perspective, it is in a strong uptrend, having a strong support around 1100 to 1090 kind of trajectory. If we manage this 1090, 1100 kind of trajectory, my sense is 1400 is a logical target which comes to my mind for stock like Bharat Dynamics. And again, as a disclosure, we hold this stock in our portfolio in the defense basket, where we feel Bharat Dynamics could be a big beneficiary of a strong order book.
Right. So 6x, if the size of the order book is to the annual revenue stream of a defense company, that's the margin of safety in terms of stock price as far as Ashish Bhai is concerned. Remember, these run-ups have been very, very sharp, and the charts are fantastic, but common sense would dictate that one takes a very balanced view on defense counters as of now. But BDL, Ashish says, offers a margin of safety in terms of the fundamentals that are running behind the stock. A 6x order book of 24,000 crores versus a top line of about 2,400 crores. Thank you, Ashish Bhai. What a pleasure to have you. And we'll keep persistent L&T Technology Services as mid-cap picks from the IT space, as also Siemens and Titan to be added if they dip a bit on the charts. Thank you so much for your time. Till the time our new guest joins in, he's Mr. Vishnu Dosad, the co-founder and managing director of Nucleus Software, another outstanding mid-cap company. We'll again focus back on the markets. The Nifty has recovered substantially from its intraday low, which was somewhere like 19,263. It is at 19,328. Remember, the shorts are getting covered, and the fact that 19,200 was a very, very strong support level on the options chain. Similarly for Bank Nifty, we have seen 44,300 on the screen, but the stock had hit a low of 44,145 and at the moment at 44,300. So 150 point tick from the intraday low on the Bank Nifty, and somewhere like a 60 point uptick on the Nifty as far as the day's low is concerned of 19,258. Again, let's drill down to what the markets are doing. At the moment, Reliance Industries is now in the green. 2482 is the price that I see. We'll just check what the day's low was. The low was 2442. So a 40 point recovery from day's low on Reliance Industries. Apart from that, you have Bajaj Finance holding up the index 1.75% higher at 7262. Bajaj Finserv 2% higher, 1490, and these are the only two index heavyweights in the green as far as the Nifty is concerned. Weakness all around, and the index down 61 at 19,323. Let's welcome a special guest today. Mr. Vishnu Dosad is the co-founder and managing director of a wonderful software company called Nucleus Software. A very exciting person to know. Over the last 2 decades, I've had this opportunity to speak to him many times on the health and way forward on mid-cap software industry. He's been one of the pioneers of this sector and has been associated with several other companies before he went on an entrepreneurial journey. And Nucleus Software has turned out to be a very, very fine product in the mid-cap financial services BFSI space. Mr. Dosad, welcome to Business Today Television, and it is such a pleasure to renew our friendship after several years.
Thank you so very much for those kind words, Mr. Bhatnagar. I think it's been exciting to play a role in our banking and financial services space, especially on the retail lending side and also on the transaction banking side. So yes, I'm very excited to be back with you and looking forward to a meaningful interaction.
Right. And before Mr. Dosad, we start our conversation, let me just highlight the fantastic performance that Nucleus came up with as far as first quarter earnings are concerned. Net sales jumped 60% at 2007 crores. Profit was up 4x, that means 400% at 53.6 crore rupees. You've seen EBITDA rise about 2.6 times to 75 crores, and the EPS shot up from 4 rupees to 20. Let's also look at the stock price, and that's been phenomenal. The company's announced a buyback, and nobody is interested in giving back the stock at prices which are lower than the market. 1011 on the stock, and it was at 626 in the beginning of April. What a fantastic journey, Mr. Dusad, and a fantastic performance both on the fundamental side as well as on the stock prices charts. You must be very happy.
No, we are happy. Certainly, we are happy because finally the market seems to be. When I say market, I am talking about our customers. The market seems to be recognizing the value, immense value that we have been delivering to their businesses all these decades. We were, and we are, and will continue to be sharply focused on delivering value to our customers' businesses. However, the focus was so extra sharp that we didn't even look at our own profitability. We didn't even look at what was happening in the marketplace and so on. And when we looked at it, we realized that our customers are open to pay far higher prices to our competitors simply because we are not going and asking for the prices that we should have been asking for, and that is what we have done, and these the last 2 quarters results are essentially outcome of that. Now, having said that, we also are excited about the new product that we have been talking about, the implementations going live, and our customers being able to derive even next level value out of this intellectual property. And we are experiencing a very exciting kind of traction for these new products also, and we are confident that we will be able to again deliver value to our customers and all our stakeholders, including the shareholders.
Right. Mr. Dusad, let's take this discussion a bit forward. Are you saying that on a comparable contract to contract basis, are mid-cap IT companies making more money than your large-cap rivals?
Okay. First of all, we will need to differentiate between large cap rivals and mid cap ones more from the content of business point of view rather than just the the volume or the size of the business point of view, because ours is strictly and purely intellectual property business, and there things are still in the process of settling down, and the relatively volatility could be higher in terms of order sizes and so on. So for product companies, especially for us, I should not comment on all the product companies, but especially for a company like us, a steady number of profitability or steady number of growth is still some quarters or maybe years away, and hence that being the case, the comparison between large caps and mid caps may not be a meaningful comparison.
Right. So let's stick to nucleus. You've seen a blowout quarter, Mr. Dusad. How do you see the remaining 2 or 3 quarters? How are you guiding the market and especially shareholders? How about EBIT margins? How about top line and bottom line? Where are they headed over the next half year and maybe a year from now, sir?
Thanks for that. Expected question. However, it has been our policy for now 2 decades not to give any guidance in specific numbers. Certainly not. We typically give, if at all you want to call that guidance, in terms of how we are looking at the possibilities. So that being the case, we are quite hopeful that we would be able to, you know, at least maintain the momentum of top line. I'm not too sure about bottom line. Um, that's about it, I can say. As I mentioned, there is keen interest in our new intellectual property, and I'll also like to elaborate why it is so. Very steadily, we have been working on the quality of our products, and on a sustained basis. There were some challenges on the quality. We have by and large overcome them. We are in the process of taking it to the next level, and that is how we are reasonably confident about how things will pan out in balance 3 quarters of this year and the coming years. We continue to experience very interesting traction, not just from India, but developed parts of the world also. Um, Very substantial size businesses reaching out to us for our loan management system and our customer acquisition system, and at times collection systems also.
Right.
And likewise, there is interest on the transaction banking side. There is interest in our payments module, in liquidity management module, and so on.
Right. Mr. Prasad, somewhere in the pandemic, 2020 March onwards till about the next 18 months, were very, very difficult for IT companies when it came to retaining quality talent. As also, there were talks about of substantial hike in salaries as well as retention bonuses. And now in 2023, we are seeing very, 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 very low hiring rates. What has been Nucleus's experience as far as salaries, increments are concerned, and how does your hiring pipeline look like?
Very meaningful question once again. I think the talent market is going through really ups and downs, quite unlike, let's say, the stock market. We saw the great resignation where industry attrition rate was at 40%, more than 40%, and so on. Um, and uh, Quite a lot of companies were taken by surprise. Unfortunately, we were also taken by surprise. However, we responded back, and we have been responding back for last 3 years in a consecutive manner. We are, talent is our biggest strength, and to ensure that we remain competitive on the compensation front also, we have raised our compensation to market levels, and sometimes above market levels also. So based on that, we are looking forward to a reasonable number of ex nucleides joining us back. We are reaching out to them. Some of them had to leave because the compensations were low. Now we are conveying to them that the compensations are certainly at par with our competitors, if not better, and they are familiar with our wonderful culture, and that is how we are confident that we will be able to get them back, and that will add to our you know core component for our growth.
Right. Mr. Dusad, there was this added fear in the market that the main customer of India's software services, which is the US, would slip into recession. And we've seen a series of downgrades also happening in the banking space, which happens to be the biggest customer in the biggest market for Indian software services. Now, how has your experience been when you go and meet banking CEOs in America? What are they talking about? Is this fear of recession overstated? Because I can't see it anywhere in the data that we track as far as the US economy is concerned. What is your granular understanding of this sector in the US?
I think there are clearly certain changes that are taking place thanks to the latest technologies and latest methodologies, both I would say. CI/CD, as they call it, continuous integration, continuous deployment, is a methodology which most of the big players are adopting now. Most of the big players in banking and financial services space have started adopting. They have learned from players like Netflix and other big techs as to how to enhance the customer experience literally on an on daily basis. So uh, to respond to or to leverage those advances in methodologies, some of the large players have started adopting these methodologies, and likewise technologies like generative AI, they have also started playing a role in the way players are creating their offerings. We can talk about things like hyper personalized offerings being made available to the consumers through AI and so on. Now, these are the changes that are taking place, but the good news is our players, uh, our technology players have been quite aware of these changes and have responded in a substantial manner to leverage the new opportunities that are coming up in the marketplace. So my take would be that, okay, a couple of quarters here and there, there may be challenge, but our Indian IT industry's relevance to global financial services space will continue to be strong, I have a feeling that it will continue to grow as well. So the recession part, we in some quarters we may experience for a couple of quarters, 2 3 quarters, and so on. That's my take on this talk about recession and new technologies and their impact on our business in our economy's business, India. And let me just add that what we have experienced day before evening, it is a matter of absolutely immense pride for all 140 crores of us, because something like this is possible only with extreme discipline, extremely sharp focus, for literally years and decades together, and all of us can and should and must take inspiration from these 17,000 of us who are at it for decades, and who create such inspiring examples for rest of us. And with those examples, we should be going back to our customers which we will certainly start doing, and let them know that this is what we are capable of. All 140 crores of us.
Right. Thank you, Mr. Dusad. It was a pleasure to host you, and I hope to meet you fairly shortly. Time to wrap up the show. Nifty is down 58 at 19,328, and the Nifty Bank is down 250 at 44,250. Thank you for joining us, and remain glued to BTTV for future news items as far as the markets and the broader economy is concerned. Thank you so much.
Thank you.